Welcome, dear traders. Consumer spending defines the movement of assets in the Asia-Pacific region today. Following the release of a fresh economic data and comments from the policymakers, Asian currencies rushed to take advantage of the situation. However, some failed to benefit from it. The biggest loser among the world's largest economies is still China. Yesterday, Moody's warned China's state-owned companies and banks of a possible credit rating downgrade. Notably, Moody's downgraded the country's credit outlook on Tuesday. And today, after the release of China's trade balance report, the negative sentiment continued to intensify. The trade data showed that China's exports unexpectedly rose in November. However, imports fell sharply, confirming the decline in domestic consumption. The indicator unexpectedly fell by 0.6%, not only missing forecast of a 3.3% growth, but also erasing the previous month's gain of 3%. As a result, November marked the 10th month of decline in purchases this year, further highlighting China's fragile domestic demand. Beijing's sweeping plan to revive consumption does not seem to have borne fruit yet. The data has further dampened hopes for a quick recovery in the Chinese economy. However, there are also worrying signs of an economic slowdown and recession in other countries. In the United States, there is a lot of employment data being released this week. After a record drop in new job openings and the low levels of private sector hiring, we can already say that the U.S. employment is falling. Combined with the reports of easing price pressures, the economic data speaks for an easing of monetary policy by the Fed. That's why we see the US dollar index slumping below 104 in today's Asian trading. Its price range of 103.90 and 104.20 may move deeper into the bearish zone today after the release of the US unemployment claims data. Let's not forget that the US dollar index is fixing its position against the US dollar's 6 major counterparts. The central banks of these countries are also facing the challenge of high interest rates and slowing economic growth. For example, the probability of a rate cut in the Eurozone in the spring of 2024 is now around 85%. Despite the decline, the US dollar is held near the highest levels of the past 3 weeks. Japan's economy and its regulator are standing out of this trend. The country has been struggling with deflation for decades and sees the way out as increasing domestic demand. At the same time, the country's authorities have not interfered in the currency market, even as the yen has reached record lows. As today's reports showed, Japan's foreign exchange reserves in November reached $1.27 trillion, the highest level since August 2022. Meanwhile, Japanese government bond yields also rose sharply today. Bank of Japan Governor Kazuo Ueda said the regulator had several options for targeting interest rates after the end of ultra-loose monetary policy, whether we keep short-term rates at zero or move them to 0.1%, and at what speed we will push up rates to 0.25% or 0.50%, would depend on economic and financial conditions of the time, the governor said. However, Kazuo Ueda warned that the country's economy had not shown a sustainable increase in inflation. In particular, Japan attributes the main role in its growth to the rise in wages and increase in domestic demand. Such prospects suit yen bulls. In addition, the yield gap between rising Japanese government bonds and falling treasuries narrowed, adding to the sharp decline in the dollar-yen pair. In the Asian session, the yen strengthened against the US dollar and moved below 145.60. Meanwhile, this slump may continue, trading within the range of 145.40 and 147.30 at the beginning of Thursday. The pair may plummet deeper today and tomorrow after the release of the US non-farm payrolls data for November. The Australian dollar strengthened despite negative news from China. The fact is that the Aussie is much more sensitive to external stimulus than internal factors. In this regard, today's news favored the Aussie's quotes. Australian exports increased by 0.4% and shipments to China, the country's major trading partner, accelerated. Compared to the previous months, they also surged more than 1.5 times. The Aussie also took advantage of the US dollar's retreat early Thursday and climbed to 0.6560. The Aussie dollar pair's 0.6525 and 0.6567 range looks worse than a few days ago. However, the pair is maintaining bullish momentum. In addition, it may rebound from the two-week lows. The New Zealand currency also attempted to strengthen within the daily range of 0.6110 and 0.6160 today. However, the Kiwi's bullish move was short-lived and the Kiwi dollar pair returned to 0.6140. The New Zealand currency remains under selling pressure before a further decline to the support levels of 0.6130 and 0.6060 cannot be ruled out. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you soon.